Evergrande Chinese crisis. Evergrande is a name you'd probably never heard before, but now it's all over the news and reports around the globe. No, it's not the ship that got stuck in the Suez Canal. That was the Evergiven. We are instead talking about the Chinese property giant. After years of intensive borrowing, the company recently said it might have to default on its debt. Today, we're going to be talking about the Evergrande Chinese crisis and how it will affect the global economy. Businessman Wei Kaiyan founded Evergrande, formerly called the Hengda Group, in 1996 in Guangzhou, southern China. Evergrande Real Estate currently owns more than 1,300 projects in more than 280 cities across China. The broader Evergrande Group now encompasses far more than just real estate development. Its business ranges from wealth management, making electric cars, and food and drink manufacturing. It even owns one of the country's biggest football teams, which is Guangzhou FC. Evergrande owner Mr. Hui has a personal fortune of around $10.6 billion according to Forbes. The problem now is that Evergrande is over-leveraged, a fancy way of saying it holds too much debt. You might be wondering how much. Well, it's $300 billion worth. The company has pre-sold $1.4 million apartments worth more than $200 billion that it has not finished building. It's begun paying its bills by offloading unfinished projects to contractors such as construction companies and painters. The critical question for investors is how and when leaders in Beijing handle the situation and whether they can launch a restructuring of the China Evergrande Group. Investors are worried that Beijing is likely to let the company collapse, wounding stockholders and domestic bondholders. Evergrande faces a debt payment on its offshore bonds after recently said that it was facing unprecedented difficulties. China's Evergrande Group's debt crisis has caused a sell-off in the global stock markets, with the U.S. index majors Dow, S&P, and Nasdaq correcting by nearly or over 2% each in July. In contrast, Asian markets were mixed as the liquidity crisis continued to weigh on investor sentiment regionally. One of Hong Kong's biggest companies, Hang Seng, hit a fresh 11-month low, whereas Japan's Nikkei returned from a market holiday with a drop of almost 2%. On Monday, China's yuan steadied in offshore trade to recoup some of the losses that sent it to a 3-week low. Evergrande shares fell more than 4%, as the focus shifted to when the company couldn't pay off its due bond interest payments. It's so surprising to note that China's second-largest developer, with more than $300 billion in liabilities, equivalent to 2% of China's gross domestic product or GDP, is scrambling to raise funds to pay its many lenders and suppliers. Investors are on edge as the risk of a messy failure reverberates through China's property sector and everything exposed to it. This also primarily includes banks and the broader economy. Evergrande employs 200,000 people and has a presence in more than 280 cities. It also has an electric car unit and investments in tourism, digital operations, insurance, and health. The debt pile became a significant issue last year when the government began to unveil a series of measures as part of a drive to address a worrying debt mountain accumulated by property firms. This has severely pushed back Evergrande's ability to finish properties and sell them to repay its debts. However, in a letter to staff, the debt-saturated property developer's chairman said that the group is confident the company will walk out of its darkest times. The crisis engulfing Evergrande, China's second biggest property company, is the most significant test yet of President Xi Jinping's efforts to change the debt-ridden giants of the Chinese economy. It could also be the most significant test that China's financial system has faced in many decades. As angry protesters occupied the headquarters of the troubled property developer in recent weeks, some analysts have described the Evergrande crisis as China's Lehman Brothers moment. Only that this time it's a credit-fueled house builder that suddenly can pay its $300 billion debts. As Evergrande's turmoil continues to brew, the pressure on China's real estate sector is being felt far beyond the corners of China. Data released in August suggested that national home sales by value had tumbled by 19.7% year-on-year, the most significant drop since March 2020. Growth in home prices had also been on the slow end. The question is how Beijing is likely going to intervene, or if it is even going to do so at all. Some analysts think it will try to save part of Evergrande with a politicized approach of creditors headed by the small investors and homebuyers. They marched on Evergrande offices to demand their money back. Such public protest is rare in China, and Beijing cannot risk it escalating into a narrative about the elites enriching themselves at the expense of ordinary people. The potential time bomb has been ticking for some months now. China's housing market has become hugely bloated by years of cheap credit and is reckoned by conservative estimates to account for 16% of GDP. However, some estimates put that figure at 25%, far more than Western economies. However, the low-hanging fruit of debt-fueled growth has long gone. In 2008, about $6.5 trillion of new credit was needed to raise GDP by about $5 trillion in that year, according to the IMF. In 2018, it took more than $20 trillion in new credit for the same growth. This means it is becoming much more expensive to repeat the trick as more credit is pumped into the system for an ever-increasing impact. In the end, there has to be a reckoning. And the crisis at Evergrande suggests that the cycle has finally caught up with the poster child of China's property market miracle. The reaction with China and its environs since the fallout have been fierce. Evergrande had committed to the building between 1.3 million and 1.6 million housing units, according to different estimates, and earlier this year asked for loans from employees, as reported by the New York Times, which it now looks unlikely to be able to pay back. Protests have broken out in front of the Evergrande offices around China and at its headquarters in Shenzhen. Employees, suppliers, and customers who have paid for homes that have yet to be built were among those who demonstrated. Though the company has yet to default officially, world markets have braced themselves for a catastrophic impact. Even cryptocurrency took a big hit in its current stocks. There are many reasons why Evergrande's problems are going to pose some serious issues. The first is that many people bought the property from Evergrande even before building work commenced. They have paid deposits and could potentially lose that money if it goes south. Some companies do business with Evergrande. Firms including construction and design firms and materials suppliers risk incurring significant losses, forcing them into bankruptcy. The third is the potential impact on China's financial system. The financial fallout would be far from manageable. Evergrande reportedly owes money to around 171 domestic banks and 121 other financial firms. The Economist Intelligence Unit's or EIU's Maddie B. King said that if Evergrande defaults, banks and other lenders may be forced to lend less. This could lead to what is known as a credit crunch, when companies struggle to borrow money at affordable rates. A credit crunch would be awful news for the world's second-largest economy, because companies that can borrow find it challenging to grow. In some cases, they are unable to continue operating. This may also unnerve foreign investors, seeing China as a less attractive place to put their money. Beijing might facilitate negotiations and funding to ensure individual investors and homebuyers are protected as much as possible. The government is willing to help and wants events to take their course, but even with all its resources, there isn't much hope for Evergrande. They could, however, change this bleak narrative, and we have to wait to find out. What do you think about the Evergrande Chinese crisis? Let us know in the comments how you think they can turn this around. Remember to like and subscribe to this channel and also share as many times as you can. Till next time.